Okay, welcome everybody. Lenny Hayes here from Trade Hall. Just giving you a little market update over the last few days. So quite start to the week, a lot of activity last week. Yet to see any major moves, and it just seems as though we're just getting just range-bound movements and data events that keep pivoting back towards one another. It's really tricky times at the moment, and volatility is quite low across the board. And we saw the same sort of situation today. We saw in New Zealand, the RBNZ, the Reserve Bank over there, hiked by 25 basis points to 5.5%. And what was interesting about that was the rhetoric that was in the comments in the press conference and media release afterwards, that the board over there and Adrian Orr basically said that was the end. It sounded like that was going to be the last hike. They forecast that the terminal rate would be 5.5%, and it seems as though they're waving the white flag, and that might be enough. So look, it was quite counterintuitive. I mean, you raise rates, but the New Zealand dollar loses over 1%. It's quite interesting. I mean, that was the consensus to begin with, was a 25 basis point hike. There was talk that maybe 50. However, the 25 came out, and then the dovish talk afterwards really mounted some huge pressure on the New Zealand dollar. As you can see there, it's down over one big figure there, down just over a cent. So yeah, that's what happened there. And then later today, we saw inflation out of the UK come out and still tremendously high. To think that these inflationary environment has been present now for the last sort of over 12 months. We saw a reading of 8.6% versus the forecast of 8.2%. So yeah, look, it was really, it's, you see parts of the world that are seeing signs that inflation may be easing and employment may be loosening up, but then, you get the odd data events and odd reading like that, and especially in Europe, and it's just really a lot of the rate cuts and monetary loosening that had been priced in some financial markets, just been heaped back on again. So the pound performed really strongly. As you can see now, it's lost a lot of that ground, but it did rally quite hard on that release. And we did see some BOE future swaps rally as well off the back of that. So yeah, rate pricing started to come back in. So yeah, look, it's tricky times. So yeah, just across the board, we can see energy tracking quite nicely. Stocks in the US overnight were pretty poor. They had one of their worst days since earlier on in the year. The Dow Jones and the S&P were both down. A percent each. See here, the futures are still in the red as well, so yeah, not a good sign. Yeah, so we can see commodities have been mixed. We've seen copper actually hit its all-time low in over a number of years, back down below $8,000 a ton, which isn't a good sign for global growth. It's a really good proxy for sentiment and growth and risk appetite around the world. And to see copper sinking like that, it's a troubling sign. We've still got issues with the debt ceiling impasse. We've had no real development since. It's reported that there was a constructive meeting between McCarthy and Biden yesterday, but no solution, and we're not any closer to any kind of agreement yet. So that looks like it's going to drag on, and the speculation around the X date is starting to brew even further. We've got numerous banks coming out with their estimates and forecasts saying that the date may be looming sooner than as expected, as early as maybe next week or the week after the start of June. So we're always going to have this speculation and estimates on when that is. And I mean, yeah, the longer this drags on, then the more jittery markets are going to get, and the more reluctant investors are going to be able to bid up risk assets like equities and the likes. So Yeah, that's sort of all we can touch on today. Yeah, with the broad theme at the moment, stocks down. Yeah, base metals pressured, and mixed readings in the FX market. Kiwi down, broad dollar up, pound leading the rest. And yeah, yield in bonds are starting to rise, but yeah, broadly led by jitters around the debt ceiling. Okay, guys, thanks for tuning in. We'll touch base a bit later on. Thank you.